Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, June 24th, and this is the weekly market update. As usual, the disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a financial advisor. I cannot give individual investment advice. Please do your own due diligence and your own research. It's your money. It's your responsibility. Okay, so one of the things that I've talked about as we anticipate what's going to happen, or we establish probabilities of what we think might happen over the next 6 to 12 months, is this lag effect of the monetary tightening being done by not just the Federal Reserve in the US, but many central banks around the world. You've heard me talk about this before, that I track. Basically, there's websites that will show you what central banks are doing week to week, that aggregate all that. And most of the central banks in the world are tightening. Although I think we're getting closer to the end of the tightening cycle around the world. But one of the things I wanted to note was, one of the legs of this recent rally in the market, which I believe is a bear market rally that's only being um, participated in by eight to 10 major stocks. And because of the passive investing, we've talked about this before, passive investing, and because the indexes are market weighted, when new money does come in, mostly to these index funds and things like that, it goes to these sectors. Throw in a little dash of speculation around AI, and you get this, late stage blow off top. But my view is that the economy that we knew over a year ago, year and a half, 2 years ago, 3 years ago, whatever, that economy doesn't exist anymore because of several factors. One of which is that previous economy basically had a lot of malinvestment and a lot of bad investments and a lot of bad business decisions, and goofy ideas were enabled by basically zero interest rates. That has changed. But even though we have a Fed funds rate at 5%, or whatever it's at, around effective funds rate around five something, and then how that percolates into the economy with mortgage rates, auto loans, credit card loans, all that type of stuff. A lot of ideas that people would want to start a business, they can't make the numbers work with rates where they're at. And current businesses, I'm seeing it carnage all throughout part of the angel investing, part of my portfolio that I was involved in. I mean, capital's just dried up, and so a lot of these companies are going to dry up and blow away. The other main argument that the bulls make is, well, unemployment isn't ticking up. Until unemployment ticks up, then this economy is good, even though we've probably had, I think the leading economic indicators were reported again last week, and I think we're now 14 straight months of negative LEIs. And so I wanted to focus on employment, and I found these two charts which I thought were good. And basically on the left, you have, this was on Twitter, uh, initial claims under pressure from rate hikes. So you have your Fed funds rate, 12-month change, okay, basically on the right, or on the left, I'm sorry, this is your change in your Fed funds rate, the blue line. It's advanced 18 months, and then you have initial claims for unemployment. And you see in the past, as rates have went up, you see what the effect is on unemployment, okay? Because why? We it's intuitive. It they businesses, it's a blunt tool instrument to slow the economy. You're raising the cost of doing business, okay? You're putting more burden on business. You are pushing some zombie companies and poorly run businesses over the edge if they have to go out and find new money, because at higher rates, stupid ideas can't exist. And so what we're seeing here, what we've seen in the past, it makes sense, but it does work with the lag effect. That's why if you advance the Fed funds rate advance it by 18 months, it kind of lines up with the unemployment. But it takes time for these things to this tightening, these rate increases to work their way through the economy. And so you see over here, even this last week now, we've seen rates, initial claims starting to creep up now. Okay, they kind of creeped up the last 2 weeks and they were level, and now, so I'm not ready to say, we're in a this is going to be the higher unemployment, because 3 weeks doesn't make a trend here. But I think it was inevitable, and these lag effects take 12 to 18 months, and that's kind of the window we're in of when the Fed started, really tightening. And the tightening continues, right? I mean, bank lending by banks is being tightened. Obviously, we've talked about that before. That's a major liquidity source. And then the continued rate, well, even though we've paused, there may be, additional rate increases, but then just the unwinding of the balance sheet. Now, I know there's things on the other side of that stealth liquidity things going on, so long story short, the last pillar is now under attack. The last pillar that the bulls had, which was, well, the whole employment situation, until that worsens, we don't have anything to worry about. And it's starting to worsen in my view. As you can see by the right, you're starting to see it climb following rates higher. So we'll have to keep an eye on it. That's what we're watching right now. All of the other aspects of the uh, hope cycle are in place, showing, negative, uh, you know, like I've said, several sectors of the economy are already in recession. So this is a Philly Fed Services employment. Says, is the service sector showing signs of weakness? You see, um, this is from Steno Research, and so obviously this is the pandemic recession, and you see we're heading negative. Okay, so services employment, that was, if you look at the employment reports, you will see that manufacturing employment was already going down for months, and construction's been holding in a little bit, but the services was the big thing, as people come back from the pandemic, as they travel. But the long story short is that I don't it's inevitable that an economy that was basically uh, addicted to or had adjusted itself to 0% rates now has rates at 5%, or I mean, the Fed funds rate at 5%, which effective rates for many loans are quite higher. I mean, it's just not going to, it's not different this time. Let's put it that way. People just are forgetting the lag effect. And so this is what I put in this chart, right? Respect the lag effect. This is the effective Fed funds rate. And you will note that, this is last year. I mean, I looked it up. I can't show it on this. It's not a live chart. You can go to I mean, this time last year, we were at a Fed funds rate of like 1.25% or between 1 and 1.25%, like an effective funds rate of like 1.12%. And so the full measure of the Fed's work hasn't even percolated through the economy. Again, it takes 12 to 18 months for these things to work their way through the economy. And so we're just now seeing, this time last year, that puts us right here. So we're between, we're down in that 1 point. Like I said, I looked at the chart before I put it up here. It's a live chart. If you go to the St. Louis Fed website, it was the effective Fed funds rate this time last year was 1.12%. We're up over 5% now. But this body of tightening hasn't worked its way through the economy yet. And so as time goes by, that's what we're going to see. And that's my forecast. As we get into the second half, you're going to start seeing this start to weigh on the economy. You're going to see unemployment start to increase. And, there's the argument as to whether how steadfast Mr. Powell and his colleagues will be on the 2% inflation target. We'll have to see. As I said before, we have many things going on, right? In the past, they've become weak-kneed. If the market realizes that we're actually heading into a recession and the unemployment rate's going up, and it's not a soft landing, it ends up, people start thinking it's a hard landing, and the market sells off 25 or 30% over the next 6 months into the end of the year. What does that do to Mr. Powell's thinking? What is the pressure from the administration going to be if you're going into the election year in 2024 and it looks like we're on our way to having a severe recession? What will he do? Will they call 3.25 or 3.5% inflation good? What if they can't get it below 4? So there's a lot of people you can listen to, a lot of analysis going on, like people like Jim Bianco. If you listen to some of the things he's been saying, he doesn't think that the Fed's going to be able to get rates down down to 2%. Okay, or it's going to be more difficult. That's why rates will have to stay higher for longer. I just don't buy it. It's not the political situation that is going to be foisted onto the Fed is going to, I just don't see it. And I think they'll make an excuse, or they'll call it good enough. They'll come up with some kind of language, because if you're in the middle of a severe recession, if the market's down another 25 or 30%, the pressure is going to be very high to do something. So again, maybe I'm wrong. Maybe he is going to hold the line. Maybe all he cares about is his legacy. But the whole Federal Reserve situation, every facet of our government, everything has been totally politicized. So I just don't buy it in the long term. And as long as unemployment has been able to stay down, the argument has been able to been made by Powell and some of these other folks. We could stay tight because employment's hanging in there. Some people are saying, I've heard some analysts say, well, the economy has now adjusted itself to 5% rates, or 5% Fed funds rate. I don't buy that either. I just think the lag effects haven't hit yet. We're seeing commercial real estate collapsing. Okay. And that's not just because of higher rates, that's other factors also. But some of these, what's going to be the next landmine that goes off? We thought we had a little bit of small banking crisis we were able to get through that. But is that the last, like I said, landmine that's going to go off, or something else lurking out there that we don't know about? Where's that shark? You swim out a little bit further, and what sharks are lurking out there? So we don't know. But past history is that you raise rates like this, and like I said, the economy is so over levered, it's so addicted to had become so addicted to lower rates, and then you're going to raise them up to the Fed funds rate to 5%, like within a year. That's basically what they did, right? And again, it takes time for this to have an effect, and we're starting to see it, drip, 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 as housing has, been under pressure. About the PMIs, we've talked about that. Manufacturing is in recession. Services is heading for a recession. Corporate profits peaked. It's all feeding through, just like the hope cycle shows, right? And again, I'm not forecasting anything. I'm just now casting, and I'm saying respect the lag. Don't fall victim to the fact. Understand that these things, like we showed in the previous chart, these things have a lag. Remember, when it shows the initial claims in red and the Fed funds rate in blue, they've advanced this Fed funds chart 18 months. So you have to understand that it takes a while, but it's unmistakable that when you raise rates, you're going to create higher unemployment. So we'll have to see what happens. And I don't think, as the sentiment changes from no landing to possible soft landing, and then eventually the realization we're going into a recession, and the possibility of additional landmines or crisis developing in the corporate high yield bond market or commercial real estate or what have you, that seeps in and causes further damage to the banking sector. We just can't forecast that right now. We do know that there's something out there if rates stay this high. So here we go. This is Jesse Felder. We follow him on Twitter. This is a tweet, kind of speaks to it. Says a record 7.6 million square feet of office space is available in the sublease market in Silicon Valley, up from 2.7 million in 2019. So there you go. That was pre-pandemic. A lot of that probably had to do with the pandemic. A lot of companies probably dried up and blew away. because of what happened. So that probably has a big effect, but that's pretty significant. That's almost like a tripling, right? Almost 2.5 times. And so again, if you're in the situation where you have these high rates, I've already told you, I've seen so many of these startups have just dried up and blown away. There's just no capital for them. Okay. And so the free money has went away, and all these dumb, that doesn't mean that every idea that comes through for a startup is dumb, but how many, you saw all the dumb ideas we've talked about. I mean, how many vanity tequilas do we need, or somebody starting a new, brew pub in Seattle, or some type of food delivery service, or what have you? Okay. How many of these things actually add value to people's life and are needed and are actually going to attract a limited amount of capital that's there? The free money has gone. And so without the free money, there's less startups, less people doing things, more vacant office space. So this just is another vignette of how things are transpiring as these rates, as this tightening works its way through the economy. A chart here. One of the pillars of the philosophy that I thought oil prices may have a chance to move higher into the second half was the return of China after the lifting of the restrictions, COVID restrictions. But internal flights in China have pretty much returned to normal, but international flights have not. Okay. Although we are seeing, this is like Asia as a whole, but you'll see like Central Asia is way above the pre-pandemic, but all of these other areas of, Asia, which is predominantly going to be Chinese travelers going to these places, has not returned. It's moving in the right direction, and I think it will eventually. But even the amount of flights from China to the U.S. has not, returned to normal, and that's in the context also of the heightened tensions. So the U.S. is not allowing as many flights. So that's all these things feed into it. So although jet fuel demand is increasing, we are slowly but surely returning. I'll give you an example. One of the portfolio stocks in the AIA portfolio, in our model portfolio in the newsletter, owns a controlling stake in the Bangalore airport in India. It's pretty much back to, that thing was, they did a big expansion. One of the reasons I bought it, because that's one of the key areas in India for IT, things like think that. It's a hub. It's, I think, the second or third largest airport in India. And they went through this massive expansion, but that was, that came online right during the pandemic. So since the pandemic has kind of receded from people's minds and travel restrictions have been lifted, we're finally getting back to the normal travel in India, and we're seeing that that slowly but surely recovers. Same thing when I look at various, there's a big opportunity in there's a lot of, especially I think in Latin America, Mexico, companies that private companies that manage airports in various countries, and those probably would have been good things to buy, at the height of the pandemic, because you knew that eventually it was going to turn around, it was going to, get solved and recover. And it's interesting if you go and look at how the different airports, a lot of the investor presentations will show you how volumes and passenger traffic has been slowly but steadily increasing as we get back to normal. In many places, we've already exceeded pre-pandemic passenger flows. So unfortunately, it didn't go as well in China as I had thought it would. It is recovering, but it's not enough to really overcome some of the other things in the energy market that I thought were, well, this is just one facet of my view on oil that didn't pan out. Okay, that's just basically the overall Chinese return after the pandemic wasn't as robust. It did have an effect, and it is in the process of continuing to return, but it wasn't as robust as I thought it would be. And this shows you. But again, tankers, there's a article this is a article that's talking about the VLCC tanker market, which is the very large crude carriers. Those are your very largest oil tankers. And there's a link to the article in the show notes. But here's some snippets from that article and why I continue to be positive on oil tankers and clean tankers also. It's just a supply and demand situation. A cyclical industry with a lack of investment that has now caught up. It's nothing new. It's just understanding where you are in the cycle. So a few snippets from the article. It said super tankers stole the show, said Clarkson Securities analyst on Friday's shipping rate action. Average spot rates for older, very large crude carriers, those are tankers that carry 2 million barrels of oil or more, rose to 83,000 per day. Newer and more fuel efficient VLCCs earned $91,000 per day. VLCCs experienced their worst stretch in decades from mid-2020 to mid-22. Well, obviously, as oil demand had been crushed because of the pandemic. So we weren't moving as much crude around. With rates languishing under $10,000 per day and ship owners bleeding cash, long-haul crude transport demand collapsed due to high storage inventories and COVID-stricken consumption. There are currently 901 VLCCs on the water, with just 10 on order, according to Clarkson's. 8 will be delivered in the remainder of this year, none next year, and 1 each in 25 and 26. That's in the context of 901 very large crude carriers. Now remember, this fleet is, shall we say, older. A large percentage of the tankers are getting to the end of their life, and we are not replacing them. The ratio of the order book to the on-the-water fleet is down to a minuscule 1.1%. So basically, if you look at a chart of the historics, this is like historical lows for replacements. And here is the kicker. This is why I'm bullish still on tankers and why I still think it's an opportunity, and why I think, as long as crude demand doesn't go down, we don't reach peak demand. And even if we do, I still think you make money in this trade longer term, is because we can't, even with higher rates, you would think, well, what do ship owners typically do? They're just like every other management in cyclical businesses in the past. What they've done is, when they get money in their pocket because of as you cycle through the tanker cycle, and old ships go away and new ones aren't built, and then demand exceeds supply at the margin, rates go up, and that you have higher than average earnings and cash flows. And what has that done in the past? That's caused these people to go out and build more tankers, and then that sets the stage, plants the seed for the next down cycle. Well, we just don't have the ability to do that because of this last blurb. This is why I'm still bullish. It is impossible to significantly increase the VLCC fleet supply until 2026 to 2027 at the earliest, as a result of construction lead times and the fact that Asian yards are already full of orders for container ships and gas carriers. So the rate increases, this is already what you're seeing in like container ships, right? It's just going to be totally swamped with supply, because what happened? Rates went up coming out of the pandemic. These people got huge influxes of cash flow, and they did what they've always done in the past, put a bunch of orders in. It was the same thing for LNG carriers. So we're kind of, even if these tanker companies wanted to do that, they don't have the ability because there's not enough yard space. There's not the ability to do that because the yards are already spoken for a few years. So this limits the amount of new supply that can come online. And so you have, again, rust and entropy working for you, because these tankers cannot just exist forever. Part of the problem is, if we lifted sanctions on Iran and Venezuela and they had to exist in the real world, or Russia, there's a significant shadow fleet of tankers that don't meet international standards that probably should be scrapped. And I'm not saying we're going to do that or anybody's going to do that, but they are significant risk. And more ports are not allowing some of these older tankers to come into their port because they represent a danger. As a ship becomes older, it's required, I think, every 3 years or something, 2 or 3 years, to go in and have a special survey done where you put the thing in a dry dock or at least in a wet dock, and port engineers come on board and they inspect things. They inspect the machinery, the hull's inspected, all these things are inspected, and then you are given you need to comply with these various hit lists that we found of deficiencies before we'll recertify the tanker. Okay. And that's how normally things are done. But, shady operators are, not doing that. And they're, working with Russia, Venezuela, Iran in the, gray market, dark market, and they're just ignoring this stuff. So um, I think that there's an opportunity here. I think a lot of the tanker companies are probably fairly valued currently, but if you're going to have 2 or 3 year period of extraordinary cash flows, that's going to result in a tremendous amount of debt reduction, which we've already seen across many tanker companies. It's going to result in higher dividends being paid, which we're already seeing that, and share buybacks, which we're seeing. So that should continue, and that is accretive to equity holders. So until we see some kind of big orders being put in for new tankers, I think you can continue to have a good run. Or if you think oil demand's going to go away, I don't believe that scenario, but some folks do. I think you're going to continue seeing the 1 to 1.5% a year growth in oil demand, which is going to require more and more oil to be transported. And again, higher rates kind of bumped up to the next level and for a sustained period of time because of all of the rejiggering that had to happen of the trade routes because of all the sanctions. This is something I wanted to point out. There was a discussion. I saw a tweet and then an article, I think it was by Doomberg, and some people were pointing out the fact that, in Norway, a large majority of cars now being sold are electric vehicles, and it has been that way for a while. Why? And what's interesting is if you look at total oil consumption in Norway, it's declined a little bit, but not as significantly as people thought it would. And people are kind of perplexed, like, well, why isn't oil demand really like collapsing as more and more, substantial amount of electric vehicles? Well, what you find out is people have done surveys in Norway, and people can correct me if there's Norwegians on here or somebody that has additional information, but my understanding is basically the reason you're not seeing this is because people buy electric cars as a extra vehicle. So it's a second vehicle, right? You're not going to drive around in the winter or wherever you're going to go skiing somewhere or out where without an internal combustion engine because of, again, people are using the electric vehicles for grocery getters or local around town type stuff. And if they need to go somewhere at a distance, they're using their internal combustion engine car. And so I found that interesting. And so I put this chart up. That was just something I read. I didn't put anything on here, but in the slide presentation. But what I wanted to point out was this is global primary energy consumption by source since about 1800. And you'll note that the majority of the energy was supplied up until really the steam engine came into big usage here by biomass, wood, and then coal, when it was beginning to be mined and used originally for heat and then as a fuel source for engines. Uh, and then again, oil, you see the progression. But what you see is when the next energy source is discovered or brought online, it doesn't like make the previous source go away. And that's, I think, something that people are forgetting about fossil fuels. Even if you start bringing these renewables on board, that's what we're going to do. We're going to replace fossil fuels with renewables, and that's just not the history of energy transitions. It's not maybe, with whale oil, yes, okay, because it was kind of finite, but a lot of these things are not necessarily as finite as, I'm not saying they're infinite, but, I'm not going to get into that argument, but let's just say that just because you bring online all these new sources, and you see what the predominant sources of energy are, right? Natural gas, oil, and coal, they're fossil fuels. And so you see the limited amount of fossil fuels and actually, or renewables. And the renewables are actually incumbent upon these other sources to make them, build them, and maintain them. So I think there's been a lot of lack of understanding. People don't understand, like, if the price, like, if we were to lower the price of energy through efficiencies and stuff like that, it's not like you save the actual energy, it just more gets consumed. You can look this up. It's called Javon's paradox. They knew about this a long time ago. It's not something new. So if you do displace these other fuels and the price collapses, other people will use them, increase their use, because the amount of energy, the wants and needs of people are infinite. Okay. And they require tremendous energy inputs. And so again, as people get wealthier, as people become, have their needs and wants met, you know, they want more. I mean, air conditioning demand. Okay, if you haven't had an air conditioner before in India, what's that mean? How many households are there? And they get to a certain threshold, you can start doing these spreadsheet exercises. So I just wanted to point this out because I think people have this misconception that, well, if we build out a bunch of solar farms, then we can get rid of coal. That's not going to happen. Okay, you can legislatively do it and then thereby raise the cost of energy. You can do that, and you can make energy more scarce. But you can force people to use less like that. But with a worldwide economy and 180 countries and a lot of developing countries and emerging markets and people that want to have the lifestyle you do, if you don't want to use oil, they'll use it. If you don't want to use coal, they'll use it. So that's what we've seen. That's what will happen, and that's why I'm bullish on these things over the next decade, because a lot of misconceptions, just general lack of understanding of how things work, how machines work, how the supply chains work, how something goes from ore in the ground and becomes a product that you use. People have no conception of the value chains of how that happens. They just assume that it just appears in a store, and they go and get it. So that's good for us that do understand, because as we have more and more bad policy put in place in the West to raise the cost of energy, that's beneficial to speculators like us because of the lack of understanding by policymakers and their constituents that are pushing some of these agendas. And so this was a Bloomberg article, I think. I don't know. I have the link to the article. You can read it. But this is what I've been talking about. People were saying, well, we didn't really have this energy crisis in the West, in Europe, because of the cutoff of Russian gas. And again, we have and had continue to have an energy crisis in the rest of the world, ex the EU, because all you did was raise the cost by sucking up all of the LNG into Europe, because they can print euros and it's a wealthy place, and they can outbid other people for the finite amount of fuel that was available. And so this article talks about that. Many developing nations are still finding it difficult to secure fuel supplies. Consider Pakistan, which this week failed in its first attempt in a year to purchase LNG from the spot market as sellers were scared off by credit risk. Bangladesh, meanwhile, was again forced to shut its massive coal power plant in late May after the nation wasn't able to open a letter of credit for fuel imports. Thailand and India are cutting back gas purchases following a recent uptick in prices. The crux of the issue is that overseas fuel is still more expensive than normal and will remain so for some time as a side effect of Russia's war in Ukraine. Asian LNG prices have dropped more than 80% from a record in 2022. But here's the kicker. They are still 40% higher than the 10-year average through 2021. And so that's why you have a limited amount of LNG cargoes on the ocean. And even though the price has come down, because of the mild winter we had and some of the increased supply from other places like the U.S., we still have prices that are 40% higher than the 10-year average. 40% higher is significant in my book, and this is why you have the problems in some of these countries. Plus, you have again credit risks and letters of credit and all these things. So if you read the article, you'll see that some countries that's opening up opportunities for them to offer fuel to these countries at different terms for long-term contracts. It will open opportunities for China and Russia, diplomatic opportunities. I know that just recently the Russians have agreed to supply like something like $7 billion in aid to Cuba over the next year or so, and most of that's going to be for fuel imports, oil. So this is something to watch. Again, I don't think that the crisis is solved in Europe. They had a mild winter. They were lucky. I don't think that the problem's solved. Hope for another warm winter. So here's an article. This is Robert Friedland, one of the people that I like to follow. He talks a lot about copper. He was being interviewed on Bloomberg. I'll put a link to the interview. It's like 8 minutes long. But he says a couple of interesting things in that interview. I've pulled out a couple blurbs. It says, billionaire mining investor Robert Friedland said the U.S. government must include copper as a critical material under President Joe Biden's landmark clean energy law. Now, obviously, Robert Friedland's a miner of copper, so he's talking his own book. But he's been saying this for a while, some of these similar things, that the shortage, I mean, this guy knows what's going on in the copper market, okay? He's in the midst of developing one of the largest copper mines in the world in the Democratic Republic of Congo, okay, and some significant other mining startups in South Africa. He was the finder and developer of the Oyu Tolgoi mine, copper mine in Mongolia, which is a very large mine that Rio Tinto ended up buying. It goes on to say, it's obvious, he said in a Bloomberg TV interview with Alex Steele and Guy Johnson. Quote, America hasn't developed a mine of consequence for 40 years. The mining of copper is absolutely critical, unquote. That's absolutely true. But yet, when the opportunity comes about to permit mines, like in northern Minnesota, it's shut down. And so I'm not going to editorialize. I've done enough of that over the last 2 years. It doesn't matter what I say. They're not going to do it. And so the price of copper is going to go higher. They were talking about it not by pound, but ton. Like on the LME, copper's like 80,000 and change a ton. And he said on that interview that he can see it doubling over the next few years. I agree. The price has to be incentivized. The price will rise to incentivize the necessary capital, but the lag time is so long to bring a new mine on. I mean, we haven't developed a mine in the U.S. in 40 years. We have this, and there's tremendous resources here in the U.S. And we're trying to have this energy transition. You see the world is getting away from globalization because of some of the choices that we're making and other countries are making around not wanting to get along with each other. And so you would think it would be incumbent upon policymakers to understand that and realize it and say, you know what, we have to do this, and we have to do it in a rational, correct manner that's environmentally sound and yet still allows us, it's unconscionable. It's a national security risk to the United States, for example. I've said this before. The fact that we generate 20% of our electricity from nuclear power and mine virtually zero uranium in this country. That's crazy. And then, you have the Senate and House talking about, we're going to put sanctions on Russian uranium, or, the fact that the Russians control like 40 to 50%. I mean, people were talking about this 5 years ago. I was talking about this. Okay. All you had to do was read Putin's master thesis. Okay. He's talking about these things. So they locked up the whole value chain on uranium. And so it can be fixed. It's just time and money. But I mean, this is where the opportunities are, guys. This is why you're seeing, all across the uranium value chain, prices going up. And the same thing's going to happen with these other metals. If you're going to force this electrification of the US economy, and quite frankly, all of the Western world, OECD countries, move in the same manner, there simply isn't enough resources. And you won't be able to fix it in a year or two or in one election cycle. It will take 10 plus 15, 20 years if you started right now. And we haven't even started. We haven't even acknowledged that it's an issue for us. So when you're rah-rahing about starting wars and doing all these things, you have to understand that over the last 40 years, we were part of the globalization, and we didn't want to do any of those choo-choo train 1800 industries like mining because they were dirty and nasty, and you should learn the code. That's what they told the miners in West Virginia. Learn the code, bro. And now you don't have it. If you don't mine it or grow it, you don't have it. And so the policies don't match, the domestic policies that are being put forward don't match the international policies. And if you're in an era of deglobalization and multi-block entities, economic entities that are starting to align, then these other countries, i.e. China, India, these countries are making alliances so they make sure that they have access to the resources they need. And if we're not going to do that, and we're not going to mine here, and we're going to be belligerent to everybody, how does that going to affect the United States economy longer term? Not in the next week in the stock market, which everybody's focused on, but over the next 10, 20 years. It's not going to be positive. It's not going to be positive. I mean, we have critical, you can read the reports. That's why they started doing these investments. They finally woke up, but they haven't woke up to the total picture yet. When they have the defense contractors telling them, we need this amount of metal, which we don't have access to in the United States, that we actually buy or is refined from Chinese refineries, and you're starting to start a war in 2025, but we need these for the missiles that you want to have for the war that you want to have, it doesn't make sense. Okay? And so understand, as a speculator or as an investor, we're trying to identify, that's what we do in Actionable Intelligence Alert. What is the premise that is wrong? Okay? Where's the thinking wrong? And you're saying to yourself, well, how does a guy down in South Texas on the internet know more? I mean, it's obvious, because everything's politicized. Everything's short term, based on the next election. There's no long-term planning here, because there can't be, because you're constantly swinging the political pendulum back and forth, and everybody's concerned about their own political party, their own agenda, getting wealthy, doing whatever they're doing up there, dealing with their donors, instead of looking at the long-term viability of the United States and the long-term security and viability of the average person. No one cares about that. And so that's the opportunity, because these prices are going higher, whether you like it or not. And so you might as well take advantage of it. Watch the interview. So global central banks buying more gold. Why wouldn't they? As the United States becomes more radical in its foreign policy, more threatening, people are wanting to move away from the dollar. The worst thing that could have happened, we've talked about this before, was the confiscation of the Russian central bank's $300 billion in assets. That sent the message, and people picked up on it. And so if you're holding dollars, if you're holding bonds, you're going to, if you're not going to sell them, you're at least going to let them things run off. And then what do you say? Well, I have to put my money somewhere. I have to put these dollars into something. I'm not going to put them into my own currency that's, some emerging market currencies. So gold, central bank holdings of gold, it says here, fundamental demand from global central banks, especially BRICS plus nations, continues as gold now makes a greater percentage of reserve assets than at any time in the past 40 years. Now you have to ask yourself why that is. Well, we know why, because People are shedding the US dollar slowly but surely and don't want anything to do. If I have gold in my vaults in my central bank in my country, it can't be confiscated by the EU or the United States. Vice, if my bonds are being held or whatever, these financial instruments that are floating around in the you know, electronically being transferred around or held on somebody else counterparty's books. No, I got the gold in my. Now, that doesn't mean that everybody's going to go to 100% of their central bank holdings, but this is definitely a trend. And again, gold is another place where not sufficient investment has been made to find new resources. That's one of the recent selections that we've made in the portfolio is a company that helps mining companies find more copper, gold, what have you. Okay. And because that's just another, all across all the choo-choo train industries, there's been underinvestment. So this kind of makes me laugh because Siemens Energy shares plunge more than 37% as wind turbine worries deepen. So several years ago, Siemens, which is a major uh, German manufacturing powerhouse in energy. They make gas turbines, nuclear power plants, and they were making wind turbines. Okay, and they merged their wind turbine company with a Spanish company called Gamesa. So they created this company called Siemens Gamesa, which is under Siemens Energy. And so this is turning into a disaster for various reasons. I'm not going to sit here and bag on Siemens Gamesa turbines. I was on a job where we had one of these things, and it was a cluster bungle. They were trying to facilitate this merger and integrate two companies, two different countries, while they were trying to roll out new turbines. It was a mess. And so I didn't expect to hear, I expected that I would eventually hear what I'm hearing now, what I'm seeing now. This was several years ago, but it looks like, it's starting to hit the fan. So what do we got here? It says this in the article. The company announced late Thursday that a review of issues at subsidiary Siemens Gamesa had found, quote, a substantial increase in failure rates of wind turbine components, unquote. The Siemens Gamesa board has initiated an extended technical review that will incur significantly higher costs than previously assumed, estimated to be in excess of 1 billion euros. Siemens Energy shares plunged over 37% on Friday after the company scrapped its profit forecast and warned that costly problems at its wind turbine unit could last for years. Remember, if they had a bunch of shoddy stuff being engineered and procured and put together and put into the ground, one thing, there's warranties on this equipment, right? And so you have owners that have bought these things, and if they're failing or they're not performing the way that the guarantees were made, then there's going to be, you need to get out here and fix this turbine. You need to get out here. I mean, I'll be honest with you, we had some issues with a particular component in these Siemens Gamesa turbines, and we could not get parts. We literally had to use the leverage of the company that I was working at in executive level discussions to go to the factory assembly area, okay, and grab the components that we needed for the commissioning of our turbines because they were failing in the field off of machines that were being manufactured. That's how screwed up their supply chain was. That was before the pandemic. So, and they never did, and then trying to go through a root cause analysis of why these components were failing was like an exercise in futility. They just were not, it was just total chaos over there. That's what I saw. So I'm not surprised by this. And this is across the whole gamut, guys. I'm seeing this in solar. You should see, I'm used to being around, I came up uh when I was in the United States Navy in the mid 80s and into the mid to late 90s. I had the fortune to be part of two ship builds in the shipyards. One was a supply ship, one was a minesweeper. And seeing how the Navy rides herd on its contractors. Now, everything's not perfect there either, but there's a process, there's auditing, there's inspections, there's people at the site from the Navy, civilian employees, crew members. You're there from the start. You're walking things down. You're asking questions. Things are being done in there's paperwork that is being reviewed. The people that I was working with were competent people. The same thing in the utility industry for the most part. Most of the people that I learned my craft from in the utility industry in power generation were what we called old hats, guys that were way older than me. They had tons of experience. When I worked at Duke Energy, we had subject matter experts. And so if I had a steam turbine question or a gas turbine question or a question about switch gears or something, there's a specific person I could call, and the guy's whole life was devoted to answering questions about steam turbines. He knew all about steam turbines. He lived and breathed steam turbines. He had 25, 30 years experience working on steam turbines. Probably had an engineering background, had been in the field, had torn these things down, had supervised outages, had been working with the manufacturer, was up on all the literature, could answer the 9 times out of 10 without even looking at anything really in depth, could answer questions, and just a wealth of knowledge. That doesn't exist anymore. Those people have retired. Companies didn't spend the time or money to invest in the next group of people because most people don't work at a company for 20 or 30 years. And so anybody that has corporate knowledge leaves. I mean, since I've left the utility, I've worked at 4 or 5 different renewable developers, because if you piss me off, I'm leaving, because I don't need to, stay here and be around a bunch of nitwits. Okay. And if somebody offers me, substantial more money, I'm leaving. There's no loyalty. So you take all of your knowledge. I've went to 2 developing companies and basically helped them build their processes around project management, construction, and operations from zero, from the ground up. Not everybody can do that, and that's just me and my teams, or teams I was on. Okay, and so that I'm seeing that now as we've had the Inflation Reduction Act, and basically Katie bar the door, no holds barred, um, build as much renewables as you want. There's no limit to the subsidies. Everybody and his brother thinks it's a gold rush and is hanging out a shingle. And so it attracts a lot of people that have no business. I mean, that couldn't even get a broom job in a warehouse, are out there doing things. Now, am I being hyperbolic? No, I'm not. I'm working with people. I'm seeing things where people are being given tens of millions of dollars and don't have a clue on what they're doing. I don't want to get into specifics, but that's what I'm seeing. And so I have no doubt that we're going to see more of this. Okay, more of it, not less. And what's going to end up happening here is Siemens going to cut the plug on this, okay, and just kill this thing off. You're not just going to have losses for years. Then they're going to have legacy. They're going to have to clean up the legacy warranty issues, and where they've got into where they want to operate stuff. And you want to spend a bunch of money losing money every year, because what they'll do is they'll enter into service contracts, and the company makes certain assumptions around maintenance, right? But if they had a bunch of Bulgarian tanks leaking oil all over the place. I mean, I just heard of a thing the other day where a turbine just fell over. I mean, I've driven by so many wind farms just around where I live. There's so much oil leaking out of these things. It's unbelievable. Next time you drive and see one of these things, look up where the nacelle meets the tower section, and you'll see black streaks. I mean, these things leak oil like you wouldn't believe. And so that's just, you go on board Navy ships, we have oil leaks, we take care of those leaks around our engines. And so we don't want oil leaking. It causes a fire hazard, causes safety hazards, a mess. So that's kind of a soapbox, but I just wanted to point this out. Do I have a certain amount of schadenfreude? No, I don't. But if you think that this particular industry is going to displace nuclear and fossil fuel generation, this isn't going to happen. I mean, the companies don't make any money doing this because of this exact situation. And it's not just at Siemens Gamesa, it's at all of them are having problems. So this is interesting. If you originally read the article, you're like, well, why is this a big deal? Well, Sweden has a new government, more of a center right. I don't want to call it right wing, but let's put it this way: not a previous government. Previous, the previous focus was going to be 100% renewable, and they changed that to 100% fossil free. So that opens the door to nuclear, because Sweden was anti-nuclear like Germany for many, many decades. And now, now that you have a new government, this is part of the problem why you can't get a coherent energy, because you have these political pendulums swinging back and forth. So nevertheless, language matters. So what's this say? It says, what's the article say? Sweden's parliament on Tuesday, this is last week, adopted a new energy target, giving the right-wing government the green light to push forward with plans to build new nuclear plants in a country that 40 years ago to phase out atomic power. Changing the target to, quote, 100% fossil-free electricity from 100% renewable is key to the government's plan to meet an expected doubling of electricity demand to around 300 terawatt hours by 2040 and reach net zero emissions by 2045. This creates the conditions for nuclear power, Finance Minister Elizabeth, however you pronounce her name, said in Parliament. We need more electricity production, we need clean energy, and we need a stable energy system. There you go. That's just summed up the nuclear uranium investment thesis. And more countries are going to start realizing this. And this is more bullish for long term, a higher and higher for longer uranium market. And overall, just nuclear industry. So I wanted to point this out. Do I get a certain amount of schadenfreude from this? Yes. Are these idiots always wrong? Yes. And do I like pointing it out? Yes. So this Bjorn Lomborg, he's not really an idiot. He's pretty good, actually. He's an environmentalist, but he's kind of like a rational person that realizes, like, we're not going to be able to like lower CO2. Really, we just need to deal. It's not probably a bad thing overall, but we can mitigate. We have the technology, and it'll be cheaper and easier to mitigate any consequences from higher CO2 than it would be to try to go to net zero. But having said that, he points out something here which I thought was funny. And we need to point this stuff out, and they do need to have brickbats thrown at them, and they need to be ridiculed. That's how you stop this nonsense. As long as we have free speech, idiots should be ridiculed. And who's the idiot? This Greta Thunberg. Now, I've seen people on Twitter defending, well, she's a young girl. What do you get off beating up on her? You want to enter the public space and talk about an issue that's so important to the lives of billions of people, i.e. energy production and energy usage and energy policy, then stand by for the criticism. If you don't want criticism, then don't enter the public arena. I don't care if you're a woman. I don't care if she's not a 16-year-old teenager anymore skipping school. She's a young woman now, and she's trying to, continue the grift. So here we go. 5 years ago, Greta Thunberg tweeted, quote, climate change will wipe out all of humanity, unquote, in 5 years. Now she's deleted it. Here's the tweet. June 21st, the 5-year anniversary, a top climate scientist is warning that climate change will wipe out all of humanity unless we stop using fossil fuels over the next 5 years. Now, true believers and zealots, I don't know if Greta Thunberg actually believes this stuff. I don't know if she realizes that she's on a grift and she's getting money now. If she's from the naive teenager skipping school, being indoctrinated, all the way through school and by her parents, or if she's on a grift now, I don't know. But when you're wrong, you're wrong. And if you're out there in the public sphere and you're wrong like this, believe me, when I'm wrong on this channel and only having 10,500 subscribers, I get it in the comments. And a self-introspective person, a rational person, an honest person, okay, a moral person takes a look at the criticism and says, well, do these folks have a point? Was I wrong? Was I too quick to jump the gun? Was my analysis incorrect? That's why I'm successful and why most people in the world aren't successful. I'm not saying I'm the only person. You have to think, you have to admit when you're wrong. You have to look in the mirror and say, I was wrong about that. I don't like that the guy, it hurts my ego and makes me angry at this person that he pointed out that I'm wrong. He did it in a way that he goofed on me. Okay, well, I was wrong. So you have to course correct. That's what a rational person does. If you're going to be irrational, how in the hell are you going to be successful in anything you do in life, not even specific to financial decisions, any decision? Again, I've pointed out in the Old Testament, if you were a prophet and you were running around calling yourself a prophet and your prophecies were incorrect, you would get stoned. I'm not suggesting we should stone Greta Thunberg. She's just a useful idiot. Okay. But, she deleted the tweet, and she's not a scientist. She's just repeating what she heard. That's what she's there for. She's a mascot. She was somebody to put out there that people could rally around, other teenagers and kids, as a beacon. Okay. She's a mascot. And now, she's not a young kid anymore. She's not a teenager. She's a young adult. And so you have to be responsible for the things you're going to say in the public sphere. And in the public sphere, you're going to get brickbats and you're going to get criticism. You're going to get memed if you're not, if you're spewing bull crap. That's just how it is. And I don't have any sympathy for people. All you got to do is shut your mouth, delete your Twitter account, and go away and live your life. No one's going to talk about Greta Thunberg except for like a Saturday Night Live skit. Remember that chick back 5 years ago was always talking about this nonsense? Yeah, that's about how you'll be remembered. But this is a perfect example, and this isn't the only thing, right? It just goes on and on with these people, and it's for a reason. Here we go. Here's a article pulled out of a newspaper. It's got an AP byline. UN predicts disaster if global warming not checked. Well, what's the date? June 29th, 1989. I mean, this is like 33 years ago. Let's read the article here, or what we have, a snippet of it. A senior UN environmental official says entire nations could, remember, they always say this, right? Go back real quick. They always say it could, it might, they always qualify it, right? So here we go. A senior UN environmental official says entire nations could be wiped off the face of the earth by rising sea levels if the global warming trend is not reversed by the year 2000. So it's 23 years later, 11 years after the prediction, and what nations have been wiped off the face of the earth? What did I title this slide? They were wrong, but got rich and gained more power. That was the goal. The goal wasn't to, maybe some people actually believe this, maybe there's some scientists that believe this, but it's a grift. It's a grift. If you can control, you create a boogeyman in the woods that can only be solved. This is the whole, what you see with government agencies, like in the US when they give testimony. Drug enforcement agency comes in. Well, drug use is going up, blah, 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 blah. We need more money. We need more officers. We need more resources. So they give more resources. The problem never gets solved, but the agency continues to grow because that's the real goal. You have career people there. They're advancing their careers, or the administrator, what have you, all the way down the line. Maybe there are some true believers out there that are actually thinking it's working. But you're telling me that people at the DEA believe that they're having an impact? You see these shows, these movies, the cops, the interviews, they know they're not doing anything. Okay. But hey, it's a way to make money. You make money off it. Same thing here. We create this narrative, this idea that the world's going to end because of climate change. It's very opaque. It's not defined. How about this? You make a prediction like this, you're wrong. You are out of science. You are chased out. You work at Burger King. You're out of the business. Okay, but it doesn't do like that, right? They're like these late night preachers that you would see on late night TV talking about the end times. They read an article in the front page of the New York Times, Hezbollah and launched some rockets at Israel. Well, we're getting ready to have the rapture in a month. If it doesn't happen, they just move on because there's true believers and useful idiots that believe this stuff. It's the same thing here. Okay. And then once they get into power and there's a constituency created around renewable energy, lawyers, and managerial class and technocrats that are all feeding on the trough, and it's never going to go away. Even though Siemens Gamesa is losing money, what they're going to do is they're going to run to the EU eventually, like another manufacturer did, I believe, last week. I think it was Vestas or GE, saying we need more money. Well, then go sell a product that you make a profit at. What are you coming here for? Everybody wants more money and more power. That's what these politicians want, more power. And we can make this thing up. Just forget about all the previous discussions around this and, move on. Just keep repeating, because we have a new crop of useful idiots. And then we spend, years and years indoctrinating people, where I have somebody telling me that CO2 is a pollutant. And I'm looking, at all I'm sitting out in a park talking to this person, and there's trees and grass around us, and they don't know what photosynthesis is. So people have told me to stop talking about this stuff. This is important because this is thinking that's incorrect. The incorrect thinking is leading to policies that are going to make you rich if you understand the incorrectness of the policy. Trying to limit fossil fuels, trying to push an agenda of renewables. I just pointed out that the Swedish government realizes that's not, they're moving away from that. Okay. They're moving to nuclear. They're not going to have 100% renewable. You're not going to replace 100% of a large country, industrial country with a high living standard with 100% renewables. It's impossible. It will not happen. And so if you continue down that road, you're going to create dislocations that are, tradable and are profitable for speculators. That's why I talk about it. And so this was a article from Doomberg. I thought this was the best and probably most likely characterization of this whole WEF thing. I hate that WEF, the clown show of Klaus Schwab and his little cronies. But I think this couple paragraphs hits the nail on the head of what's really going on there. And I wanted to point this out because I thought it was so introspective. I'm actually trying to go interview this Doomberg guy. I know he does a lot of interviews specifically about this stuff, because I haven't been doing interviews lately, but this impressed me so much, this take, which I actually think is probably Occam's razor. It's probably the most likely take. It says, this is Doomberg writing now, "We do not buy into the theory that the World Economic Forum and its Dr. Evil lookalike Klaus Schwab are the brains behind a nefarious scheme by the world's elite to execute a global depopulation agenda. A far more likely explanation is that Schwab created an access grift that succeeded beyond his wildest imagination. Having correctly identified the Malthusian instincts of the rich and politically powerful, which is true, Schwab built for them a private club that validates those predispositions, justifies them in a veneer of intellectual rigor, and paints them into a future of digital utopia. In exchange, the WEF collects untold millions in membership fees, and what Klaus does with that money is conveniently obscured by the secrecy of the Swiss regulatory and banking systems. And it's always about money. It's always a grift. 9 times out of 10, who benefits? Cui bono? Who benefits and how much? That's what you have to ask. Is that cynical? Yes, Klaus Schwab isn't trying to save the world. He started this grift. It took off. He was, probably surprised. So keep, ramp it up. Okay. And it's right. You got people like, Malthusians like, Bill Gates, these other people that are depopulationists, they're just kind of, you got lucky, you created a company, it got built up, you're in the right place at the right time. Okay. I don't know how much skill was actually involved by Bill Gates when he got MS-DOS away from IBM and built it up, whatever. Right place at the inception, birth of the personal computer industry, and then getting, Microsoft products to ride that. That's great. You're a billionaire. You did good in that field. That doesn't necessarily translate. Why are you breeding mosquitoes and releasing them around the world? Why are you on this vaccination thing? Why have you been a person that worries about population your entire life? There's vignette after vignette, quote after quote of him saying this. I'm just using him as an example. That's the example you would say that, what Doomberg says here, having correctly identified the Malthusian instincts of the rich and politically powerful. That's exactly right. So I think this probably is the real issue. It's always a grift, right? Always. So again, peak ESG, I just wanted to point this out. I think this is the final slide. This is the number of S&P 500 companies citing ESG on earnings calls for the last 5 years. And you see, as you remember, ramping up, because we were even talking about it, but you see it's kind of peaked around 2021. Looks like it might have been the peak year, and it's been in decline ever since. So this is just another uh, piece of information where I've kind of said that, been saying this, that we've passed peak ESG. It that you know, again, it's all about the bottom line on things. Is the bottom line with these companies. That's all they really care about. And once they realize that it's not profitable or it's going to cost them a ton of money, then they start moving away from it. And so we'll see if I'm wrong. But again, why is this important to talk about? It's not just to like dunk on these people or look, we were right about this. No, it's the fact that because of this insistence on focusing on these things, you focused on this to the detriment of the real things you needed to focus on, which is long-term, viable, considered, well thought out, engineered energy strategies, okay, for your country and for the world. You've not done that. You've not made the necessary investments. You've demonized fossil fuels. You've created a zeitgeist where you've turned people against the very energy sources that allow them to live in a modern, clean, you know, relatively stable environment. And so that's the investment opportunity. That's why we're so bullish on offshore oil field services, right? That's why we're bullish long term on. That's why we think we're going to make new all-time inflation-adjusted highs in oil and uranium and in copper and nickel and all these things, because we've demonized these things. Yet we need them to do what we need to do in a growing world where people are entering S curves and becoming wealthier and entering the middle class and wanting a better life. It's all, if you don't mine it or you don't grow it, you don't have it. It's just that simple. You can't conjure, you can't program, you can't code a copper mine. You have to go into the earth and build it. And there's a lot of pre-work that goes before that. So that's why I talk about it, because that's your major opportunity over the next decade. Okay, notwithstanding the cyclical little downturns in the economy, which at the margin are going to affect prices, the long term over the next decade at least is going to be, because of the tremendous hundreds of billions of dollars of lack of new investment, is going to lead to very high prices for many of these things. Okay, guys, that's it for this week. Appreciate the viewership. Thank you. And again, we'll see you in the comments section, and we'll talk to you next week.